House Republicans unveiled their tax reform bill Thursday, leaving in place current 401k retirement plans and eliminating some state deductions. President Trump praised the plan but said there is much work left to do. Here's a look at what the legislation tackles. 401k plans. Despite weeks of arguing among lawmakers, the bill didn't change the 401k retirement plans. Republicans had considered slashing pre-tax donation limits from $18,000 to as low as $2,400 for some Americans. State and local deductions. After the tax reform framework was revealed last month, some lawmakers grumbled about a provision that would eliminate state and local tax deductions, meaning taxpayers in high-taxed states would lose a write-off. This impacted mostly blue states, such as California and New York. The latest bill ditches a full repeal of the deductions, called SALT, and instead leaves in place state and local property tax deductions up to $10,000. However, other deductions, such as income and sales tax, would be eliminated. I view the elimination of the deduction as a geographic redistribution of wealth, picking winners and losers, said Representative Lee Zeldin, RNY, who also said he doesn't support the current bill. Corporate taxes. The corporate tax rate would be lowered to 20% from 35%. It's unclear if this reduction would be immediate or gradually implemented. Mortgage deduction. The plan would drastically reduce the cap on the popular deduction to interest on mortgages to $500,000 for newly purchased homes from the current cap at $1 million. Child tax credit. The child tax credit is raised to $1,600 from $1,000. The $4,050 per child exemption is also eliminated. Senator Marco Rubio, Republican Florida, said in a tweet that the House tax plan was only the starting point. He said the $600 child tax credit was not enough to help working families. High-income households. The legislation eliminates the alternative minimum tax, a supplemental tax meant to offset benefits a person with a high income could receive. The bill also phases out the so-called estate tax, sometimes referred to as a death tax by opponents. The federal estate tax generally affects wealthier Americans because it is only levied on a portion of an estate value transferred after death that exceeds a certain exemption level, according to the Center on Budget and Policy Priorities. Tax filing. The legislation aims to simplify how Americans file their taxes. The filing system would be able to be completed on a postcard with just 15 lines for most Americans. The plan also shrinks the number of tax brackets from 7 to 3 or 4. With respective tax rates of 12%, 25%, 35% and a category still to be determined. This is the beginning of the end of this horrible tax code in America, Representative Kevin Brady, Republican Texas, told Fox News. The plan sets a 25% tax rate starting at $90,000 for married couples, with a 35% rate beginning to bite at $260,000. Which means many upper-income families whose top rate is 33% would face higher taxes. Individuals making $500,000 and couples earning $1 million would face the current Clinton-era top rate of 39.6%. Fox News Chat Program and Barnini Chakraborty contributed to this report. The Associated Press also contributed to this report.